Ah, ça va? Ça va, mon ami? Oui. So, can we start? So, good afternoon, everybody. Welcome to the Bank of Mauritius. We are doing it in a different location because there is refurbishment in the place where we usually have the meeting. So, ladies and gentlemen, members of the media, very good afternoon. It is my pleasure to welcome you all to this press conference to brief you on the gist of the 75th Monetary Policy Committee meeting held today. I shall provide you with an overview of the international and domestic economic developments, which the MPC carefully scrutinized during its policy deliberation before making its decision. Let me start with the international economic developments. Since the last MPC meeting, developments of US tariff has remained at the forefront of global economic headlines, reflecting ongoing concerns about trade policy and trade war and its broader implication. While several trade deals have recently been finalized, offering some relief and contributing to a decline in uncertainty, apprehension still lingers. The finalized agreements mark progress towards more predictable trade relations, yet the overall landscape remains cautious as stakeholders await further clarity on many unresolved issues at the international level. The mix of progress and lingering doubt continues to shape market sentiment and international economic strategies. The IMF, in its World Economic Outlook Update July 2025 report, has revised its growth projections upward from the April 2025 reference forecast from 2.8% to 3% for 2025 and from 3% to 3.1% for 2026. The upgrade reflected positive trade negotiations for some important countries, like China, and front-loading effects. However, the IMF highlighted that uncertainty over the magnitude and impact of the trade shock persists, and compared to the pre-April 2 forecast in the previous report, global growth is still revised downward by 0.2 percentage points for this year. Meanwhile, the World Bank, in its Global Economic Prospects June 2025 report, has scaled down its global growth forecast to 2.3% in 2025 and 2.4% in 2026. The OECD, in its June 2025 economic outlook, also projected global growth to slow to 2.9% in 2025 and 2026. Risks to global growth outlook are tilted to the downside. The evolution of trade policy and tariff policy will be decisive factors for the final global growth outcome. Unfavorable trade developments may dampen growth prospects for major economies, heighten financial stress, and undermine economic confidence, potentially leading to reduced investment spending. Spiraling inflationary pressures as global value chains unravel could magnify the potential impact on real disposable income. Fresh bouts of geopolitical conflicts and weather-related events pose additional headwinds to the global economy. Global inflation remains above many central banks' targets, despite recent declines. However, the lag effects of the imposition of global trade tariff and rising trade protectionism are starting to be felt across regions and are expected to drive global inflationary pressures. Some advanced economies, such as the US and UK, are even confronting a new buildup in inflation, as reflected in the incoming data for inflation. The IMF projects global inflation at 4.2% in 2025 and 3.6% in 2026. Notable upside risks to the global inflation outlook could arise from widespread trade and tariff protectionistic measures, fragmentation of global value chains, and currency adjustment to preserve external competitiveness. Crude oil prices have broadly stabilized since June 2025, reversing earlier gains from supply disruption as a result of the conflict in the Middle East region. Oil prices are expected to settle under $65 per barrel mark for the rest of 2025, but uncertainty over the effect of tariff on demand persists. Global food prices move up in June 2025 amid concerns about the repercussion of trade developments on production and demand. By contrast, the Freightos Global Baltic Index, which measures global container freight rates worldwide and used as a bellwether for shipping costs, retreated across the last 2 months, reflecting softening demand as front-loading pressures dissipated. The freight market remains sensitive to geopolitical developments and tariff policy shifts, with rate correction expected to continue through year-end. Central banks globally are increasingly inclined towards a forward-looking and data-driven approach. I repeat that, forward-looking and data-driven approach towards monetary policy. The ongoing uncertainty has prompted many towards the route of caution. Since the beginning of 2025, a vast majority of policy rate decision has been to stay put, taking into consideration the balance of risks to the inflation outlook and trade-related uncertainties. I was informed just now, I think about 195 central banks have held their rate. The US Fed has so far refrained from taking any policy action in 2025, holding its policy rate steady in the range of 4.25 to 4.50% at its July 2025 meeting, as it weighed growth concern against inflation risk. The ECB, i.e. the European Central Bank, lowered its policy rate by 25 basis points in June 2025 to 2%, but kept the status quo at its July meeting. The Bank of England lowered its policy rate by 25 basis points to 4% at its August 2025 meeting, but it was a very, very close decision, and they needed 2 rounds of voting to get that rate down by 0.25, but indicated the likely ending of its monetary policy easing cycle soon. Now I come to domestic economic developments. On the domestic front, real GDP growth was lower at 4.2% in the first quarter of 2025, compared to 5.2% in the fourth quarter of 2024, dragged down by contraction in the accommodation and food service activities, and this means essentially tourism, when we speak about accommodation and food service activities, and construction sectors. Other sectors registered positive growth. On the demand side, consumption expenditure was the driver of growth in the first quarter of 2025, while investment spending remained lackluster. The output gap continued to narrow as the economy moved closer to its potential. Incoming data for tourist arrivals suggests that the accommodation and food services activities bounced back in the second quarter of 2025. Mauritius welcomed 658,909 tourists in the first half of 2025, up by 2.1% compared to the first semester of 2024. On this trajectory, it is likely to go slightly above the 1.4 million tourists for this year. I have a discussion with many people in the tourism sector. As you know, this figure does not include the month of July. We have had a very good month of July. The increase was about 10.2%, if my memory serves me well. And the forecasts for the next 5 months are very good. And most of the hoteliers and people who are in that sector are expecting the figures to be higher than the 1.4 million that was projected. And in fact, our forecast for GDP growth is based on 1.4 million. So if we exceed the 1.4 million, the impact on growth is going to be slightly better. Reflecting the improvement in arrival, gross tourism earnings increased by 6.8% year-on-year in the first half of 2025 to 47.4 billion rupees. And the Bank of Mauritius is forecasting this figure to reach 97 billion rupees for the year. And here also, I must point out, the rate of increase of receipt is higher than the rate of increase of numbers. This is because of the positive impact of the pound sterling and the euro, because most of our tourism come from the UK and from Europe and then the UK. And if you include Réunion Island, where they pay in euro, so this has had a good effect on tourism receipts. Looking ahead, both domestic and trade policy uncertainty are expected to weigh on the economic outlook. The negative effects of further changes in global trade policies and the impact of fiscal consolidation measures will have non-negligible ramifications on key sectors of the economy. Some important sectors which are already operating in a highly fragile and uncertain economic context may register lower than expected growth rates. Now again, I need to explain this quite straightforward. Government has had no choice than to do fiscal consolidation. The challenge is, how do you fiscally consolidate without impacting growth? And in some sectors, there might be some marginal impact on growth. So we have had to take this into account in our model. So whereas the bank had projected GDP growth for 2025 to be within the range of 3% to 3.5% at the May Monetary Policy Committee, latest development and uncertainty, both domestically and internationally, point towards GDP growth of around 3% for this year. We think it's going to be slightly higher than 3% based on what I've just told you, i.e., tourism is likely to be higher than 1.4 million. We think some of the changes that have been brought in the finance bill on the FSC, which is the fair share contribution, and on real estate development, I think this will also give a spur to additional investment in these two sectors. There are some early signs that the labor market is starting to cool off. The unemployment rate increased from 5.7% in the fourth quarter of 2024 to 6% in the first quarter of 2025. Youth unemployment stood at 19.8%, while female unemployment rose to 8% in the first quarter of 2025. Growth in wages, measured through nominal year-on-year changes in the wage rate index, moderated to 6.6% in the first quarter of 2025 compared to double-digit growth recorded in the previous 4 consecutive years. Again, here I must make a comment. The challenge that we are facing is that if there is increase in wages that is not matched by increase in productivity, this is going to lead to inflation. And it is very clear that for some time, domestically generated inflation has been high because of increases in wage that is higher than wage productivity. I come to inflation. Inflation in Mauritius is on the rise. Headline inflation edged up for the 4th consecutive months to 3.1% in July 2025. Year-on-year inflation remained high at 5.2%. The increase in inflation largely reflected the impact of budgetary measures, which include higher taxes on demerit goods and additional excise duties on corn. I mean, for your clarification, demerit goods is a term that our research department uses for taxes on alcohol, on liquor, and on cigarettes, and also on high sugar content. It's called a demerit goods. So essentially, inflation was coming down, but then there has been the budgetary measures where they have had to fiscally consolidate, and we all know what fiscal consolidation means. There has been some increase in taxes, and there has been an increase in extra duty of course. Now, we think that is going to be one-off, and it's going to ease, because this is what happened. It's increased immediately, then the effect is going to lag after a few months. As the one-off effects of budget-related price hikes dissipate, inflation is projected to remain firmly anchored within the MEC's target range of 2 to 5% through the rest of 2025. Year-on-year inflation is projected to subside, and headline inflation is projected at around 4% for 2025. So we are projecting inflation at around 4%. This is a range. We think, all things constant, it could be slightly below 4%. This is 0.5 percentage point higher compared to the previous forecast of 3.5%. We have had to revise our forecast because of the events that have taken place with respect to fiscal consolidation. Nevertheless, the outlook for inflation remains subject to important upside risks, mainly stemming from abroad. Trade-related price hikes may result in broader price pressures as they feed through global value supply chains. The trajectory of commodity prices is also highly contingent on geopolitical tension and climatic conditions. So we have to factor in these three effects. Tariff, especially the secondary effect of tariff that could impact the price we pay for our import. Second, if there's geopolitical tension. And third, climatic condition. So these are the three factors that it's very difficult for us to predict with accuracy, and that's why we always give a range as opposed to a specific figure. The current account deficit as a ratio of GDP widened to 5.1% in the first quarter of 2025 from 4.8% in the first quarter of 2024, reflecting primarily a larger deficit in the goods and second income accounts, as well as lower surplus on the services account. Let me explain this. The services account is essentially the receipt we get from tourism and from primary income. Because in the first quarter of this year, tourism went down, obviously the inflows also were impacted. So that's why you will have a higher deficit. And at the same time, imports has increased. And when imports increase, obviously we need to finance this import, and this impacts the current account deficit. The external sector situation is expected to improve during the second half of 2025. On a calendar year, the current account deficit is projected to improve to 6.2%. So we think there's going to be an improvement, again, for the reverse reason that I've mentioned for the first semester. In the second semester, tourism is going to do much better than in the first semester. And this is going to have a positive impact on the services account. As higher surpluses in the services and primary income accounts are expected to mitigate the impact of the widening trade deficit. We expect an overall balance of payment of 9.3 billion is expected in 2025. We expect the surplus in the balance of payment. This is because of inflows, the financial flows, the capital flows. And all these count, obviously, for the balance of payment. The Mauritius IFC continues to attract healthy financial flows as global cross-border investment activities remain resilient despite the challenging global conditions brought about by the growing global uncertainty amid U.S. new tariff policy. The gross official international reserve of the country remain comfortable, providing adequate buffers against potential external shock. The gross official international reserve stood at 9.7 billion as at June 2025, representing 13.2 months of import cover. The import cover is always based on import bill of the previous calendar year, compared to 8.2 billion at end June 2024. So the increase is from 8.2 to 9.7 billion, i.e. an increase of $1.5 billion. Notwithstanding the fact that the bank has started to refund external borrowings. If you remember, the bank borrowed in dollars during COVID in order to finance expenditure, loans, what we call swaps and repos. We have started to reimburse some of these loans. We have already reimbursed, I think, around $316 million that we have refunded since November 2024. $316 million. Again, we are doing this as a prudent manager. And we have also earned $374 million more in terms of foreign exchange better management since November 2024. Now I come to the money market. Let me now turn to latest development in the money market. The bank has been issuing BOM securities to address the excess liquidity situation. Again, let me refresh memories. There was excessive liquidity because of excessive money printing. 180 billion rupees were printed during COVID. Some of these money are still in the system. And the Bank of Mauritius, to prevent inflation, has to mop up this liquidity. And when we mop up this liquidity, we have to pay interest. And this interest is costing us between 4 billion and 4.5 billion per year. And we have a responsibility to do this to ensure that there is no inflation because of excess liquidity. Since the beginning of the financial year, a total amount of 12 billion was mopped up through BOM bills issued in the 91-day tenor at weighted yield ranging between 4.13 and 4.29%. As at 1st August, outstanding BOM securities amounted to 128 billion. So you have 128 billion excess liquidity in the system. The optimum is not zero, because we have to keep liquidity in the system for government to come also to borrow in order to service their requirement. The overnight deposit facility. Again, this is excess liquidity that the banks have. They place it at the Bank of Mauritius overnight, and we pay them 3%. So that also costs money. We have to do it to prevent excess liquidity and to make sure that we rein in inflation. The overnight deposit remain an effective monetary policy tool, absorbing the bulk of rupee excess remaining in the system. Since the last MPC, on average, an amount of 52 billion was placed on overnight deposit with the bank at the rate of 3%. So this is what we have to do. In addition to open market operation, we have to mop up this excess liquidity on a daily basis, and we pay 3% in order to mop up this liquidity. And this is the price that the Bank of Mauritius has to pay in order to rein in inflation. Now I come to foreign exchange market. On the domestic foreign exchange market, there was a noticeable improvement in foreign exchange flows. From 3rd January to 11 August, c'est-à-dire le début de l'année à yesterday, I think yesterday was 11, banks purchased a total of $4.6 billion. This is $866 million more than they did during the same period last year. Let me repeat this. 4.6 milliards de dollars the bank purchased. It's 866 millions more than what they were able to do during the same period. They also sold, because banks buy and they sell. They sold $4.8 billion to the market over this period, approximately 972 millions, c'est-à-dire 972 US millions more than in 2024. So you can see the flows have improved, but we have a backlog. I'm going to explain this backlog. And this is as a result of decisions made by the Bank of Mauritius, by the team working under the leadership of the FDG. To bring discipline, we also increase the rate by 50%, and this has helped also. So this is the situation. It has improved, but we have a backlog. Significant inflows were seen from the accommodation and financial sectors during the last week of June 2025. Holders of foreign exchange dispose of foreign exchange mainly to meet end of financial year requirement, but also benefited from favorable market movements with the appreciation of the euro against the US dollar. However, US dollar remained under pressure with increased demand from importers seeking to benefit from the appreciation of the rupee against the US dollar. However, I need to inform the journalists and the people. At times, there are some legitimate but unfair criticism on availability. What has happened this year compared to last year? The flows have increased. But we have had 3 exceptional events. And again, let me be very candid about this. When government introduced excise duties on cars, the measures did not take place immediately. And they were given, 28 days or 21 days, and we all know what happened. 7,300, about that. Cool. 6,926, to be exact, were sold during that period. How do you finance that? And it happened in May and June. So this cost the country $200 million only because of the time frame that was given for people to import their cars. And we know what happened. People were to buy their cars later, they bought it before. Now, hopefully what's going to happen, fewer cars will be bought in the future, and this is going to stabilize it. But what happened? We had an artificial shortage because banks were giving priority to the concessionaires because they are clients of their concessionaire. And the SMEs and retail investors were squeezed. And that's why we have had to intervene twice. And we gave guidelines on our intervention to give priority to SMEs in order to do it. So that 200 million would have made a difference in order to clear the backlog. And let me explain very clearly. There's a flow, there's a backlog. This backlog dates back to COVID. The flow is what we need to do on a daily basis. The flow is working. But the backlog, and then there are 2 other factors. If you remember, the STC thought it could pay petroleum products in rupees. Obviously, this is not true. So we have had to supply dollars to the STC. And the STC have bought $365 million from the market to do 2 things, to service their flows and to clear the backlog. 365 million. CEB, every day, every week, they were asking us, can we help? And the system has helped them. Et CEB, $145 million in order to finance their flows and to clear the backlog. That's why I told you there are 2 things, the flows and there's a backlog. So out of this 972 million, if we add this 972 million, we would have cleared the backlog. But there were 3 events that happened. Vehicles, $200 million. CEB, that took $145 million. I mean, rightly so. And STC for $365 million. There's some amount also that was given to Agricultural Marketing Board. It's a small amount. But we need to help them because they are importing food and foodstuff for the country. So since the beginning of the year, CEB and STC have purchased $145 million and $365 million respectively from the market to meet both their current payment obligation and concurrently to reduce their outstanding swap lines of credit. You know, when they don't have access on the spot market, they have to do swaps. And when they do swaps, it can become expensive. So they have been helped, basically, to address these issues of swaps. The backlog has been significantly reduced, but there are still new requirements on a daily basis. And I've said it before. We're doing our best, but we cannot clear a backlog of 6 to 7 years in 1 year. But we have made progress. And I will tell you later what we're going to do until the end of this year in order to clear this backlog. And we think it's possible, unless, obviously, globally, there are some issues and prices go up. Since the last MPC, the bank intervened twice to sell 40 million on the market. Total foreign exchange intervention by the bank since the beginning of the year amount to 90 billion compared to 195 million between 3 January and 12 August 2024. Now again, because the flows have been very good in the market, there's no need for intervention. And it's good that the nation understands that. We cannot intervene every day because we have to let market forces do the work. And the role of the Bank of Mauritius is to intervene to smooth volatility when there is huge volatility. Otherwise, it's determined by domestic market condition and international market condition. And the flows were good until we faced that issue of $200 million to finance the car. The rupee continues to reflect key economic fundamentals of demand and supply, as well as international currency movement. Between the 7th of May, the time when we had the last MPC, and the 5th of August, the rupee exchange rate appreciated by 0.42% against the dollar, but depreciated by 2.6% against the euro and 0.56% against the pound sterling. Here also, I need to explain this very clearly. The euro is strong internationally against the dollar. You know by how much it has increased. However, the euro has appreciated by far less. The euro has appreciated far less against the rupee than against the dollar. And the dollar has depreciated by about 5% since the beginning of the year. I've asked a question to the Ministry of Commerce. We think that because we import around 65 to 70% of our imports in dollars, and the dollar has come down by 5%, unless there's a lag effect, this should have been reflected in lower prices, all things constant, unless there are other things that are happening. And on the other hand, the tourism sector is doing very well because they receive their inflows in euro and pound sterling. And they are doing very well, and the SDG, who is the chair of MIC, is negotiating with them for some of them to pay back their loan to MIC. So, this is a good combination to be in. The dollar is depreciating. We import 65 to 70%, depends, because even when we import from South Africa and from India, they charge us in dollars. And the hotel industry is doing very well because they're exporting their services in pound sterling and in euro. Okay? So, we have spoken about the value of the rupee. We have spoken about the availability of exchange rate. We have spoken about the reserve. We have spoken about inflation. And on all four indices, and the extremely difficult circumstances and legacy that we have inherited, we've done okay. There's a lot of work to be done. We understand that. And we'll tell you what we think we can do in the future in order to clear this backlog. Let me come to financial stability. When I read the reporting on this press statement, there is never a mention of financial stability because everybody is concerned about inflation, about the value of the rupee, about reserve, and about that. But this is an extremely important factor, financial stability. It's very important. And I'm going to speak about it. The main development in respect of risk to financial stability as a resilient financial system enhances the transmission of monetary policy and supports macroeconomic stability. Risks to financial stability were moderate in the first half of 2025 and are expected to stay so for the rest of 2025. The banking sector remains resilient to an array of potential adverse events, propelled by its strong capital and liquidity buffers complemented by the robust prudential regulatory regime. The banking sector holds strong solvency buffers with a capital adequacy ratio of 21.8% in March 2025. This is a very important matrix. We call it CAR, capital adequacy ratio. The sound liquidity, you need to have cash if people come to the bank and have cash. And this is called the liquidity coverage ratio. The sound liquidity buffer is evidenced by the liquidity coverage ratio of 281.6 in June 2025, hovering well above the minimum threshold of 100%. So this is what I call about prudent, resilient, and stable financial system. The assessment of risk to financial stability from the household sector indicates a marginal increase in the second quarter of 2024. Here we're measuring the indebtedness of the household sector. The indebtedness of the household sector went up slightly to reach an estimated 39% of GDP in June 2025. Still, the capacity of households to service their debt obligation remained healthy. The debt servicing cost relative to GDP is projected to be around this historical trend. As a result, credit risk from the sector is anticipated to remain low. The ratio of non-performing loan, what we call NPL, for the household credit portfolio to total bank credit lingered around historical lows of 1.7%. This is people who don't pay, what we call impairment. It's low in March 2025. In addition, favorable labor market conditions and subdued inflation are increasing the financial capacity of the household sector. Then we look at the debt of corporate sector. The financial soundness of the corporate sector is broadly stable, though some sectors exhibited vulnerabilities, notably in the agro-industrial and construction segments. The asset quality of the corporate credit portfolio of banks registered a deterioration in the first quarter of 2025, with the non-performing loan ratio going up to 5.1%. Nonetheless, debt sustainability in the sector is sound, as business leverage relative to GDP hovers around its lower level in the last 15 years. The banking sector continued to support the economy with sustained credit flows. The annual growth of bank credit to the private sector was 11% in June 2025, driven by growing household and corporate credit portfolios. Credit to the corporate sector went up by 10.1%, while household credit rose by 12.3% in June 2025. The quality of the credit portfolio of the banking sector remained broadly sound, despite a rise in the NPL ratio to 3.6% in 2025 from 3.4% in December 2024. Banks held sufficient provision to cover for potential losses, with a coverage ratio of 62.5%. This prudent provisioning strategy highlights the preparedness of banks to absorb credit-related shocks. So we do stress tests to measure the resilience of banks to unlikely events, and they pass all these stress tests. This is done in all countries, and we have a team that does this job at the Bank of Mauritius. The bank conducts regular stress tests to evaluate the resilience of the banking sector to potential macroeconomic, credit, interest rate, exchange rate, and liquidity shocks. The latest stress test results confirm the soundness of the banking sector to adverse but plausible shocks. The sound buffers maintained by the banking sector are broadly adequate to mitigate potential risks as they arise. The bank, which is the Bank of Mauritius, continues to proactively monitor potential threats in the evolving macro-financial landscape to maintain price and financial stability. Because our mandate is obviously price stability, it is also financial stability. So now I'll come to the decision that all of you have come to listen, MPC. The MPC discussed latest observation on the global economy and domestic economy. The MPC noted that despite announced breakthroughs in trade talks, the international trade ecosystem is still marred with uncertainty and unpredictability. The fallout of new tariffs on growth and inflation across markets in the region remain highly unpredictable. And again, let me explain that in very simple terms to all of you. All monetary policy committees in the world have to make the choice basically between controlling inflation and growth. In America, it's between inflation and employment. And employment is a proxy for growth. So all of us have to make this very tricky judgment. Do you use monetary policy, increase, decrease, or stay where it is, taking into account inflation and taking into account also growth? And this is the choice that we had to make. On the domestic front, growth prospects are highly delicate and surrounded by downside risk. And I've just explained to you because when you do fiscal consolidation, that's why the IMF call it growth-enhancing fiscal consolidation. See what it means? Now, but very often, when you do fiscal consolidation, there could be negative impact on growth. So there is that potential risk. Inflation has been on the rise recently, although on account of some transient factors. We mentioned these transient factors. Upside risk to the inflation outlook dominate. From a pragmatic standpoint, considering the prevailing economic uncertainties, it was deemed judicious to maintain the status quo as a prudent course of action. We call it strategic caution. While the current uptick in year-on-year inflation may be viewed as transitory, with the impact from the budgetary measures fading gradually, the risk from higher prices due to tariff and trade wars may be more pernicious and long-lasting than expected, especially in the context where domestically generated inflation and service inflation remain sticky. This is the issue. We have to look at service inflation. We have to look at domestically generated inflation, which is inflation caused by wage increase that is not matched by productivity, and we also have to look what is happening internationally. Moreover, with regard to the domestic foreign exchange market, it has been found that the increase in the policy rate engineered during the first MPC of this year and parallel rise in the money market rates, because the yield curve also has improved, through supporting money market liquidity management operation, had a positive impact on interest rate differential, foreign exchange flows, and the rupee exchange rate. So it is very important to maintain that interest rate differential, foreign exchange flows, and the rupee exchange rate. And we are hoping that if there is a decrease in the US rate in September, and if this differential increases, this is going to support the rupee, and this is going to bring in more foreign exchange. So that's why, we need to be data-driven, and we need to be forward-looking in the conduct of monetary policy. The measures rolled out by the bank to restore order in the foreign exchange market have borne their fruits as well. Additionally, global uncertainties against the backdrop of evolving trade policies, ongoing geopolitical tension, and uneven recovery across major economies warrant a cautious and data-dependent approach to monetary policy. I call it data-dependent. We have to look at the data. We cannot just do it because we think it's going to happen. So it has to be data-driven, and it has to be forward-looking. As a result, the MPC unanimously decided to keep the key rate unchanged at 4.5% per annum at its meeting today. And as I said, it is a finely balanced decision due to global and domestic uncertainties. The MPC will continue to closely monitor economic development and stand ready to meet in between its regular meetings and take appropriate action to achieve its dual mandate of maintaining price stability and of promoting orderly and balanced economic development. Thank you very much. So if there are questions, I will gladly take them on monetary policy. Thank you very much. Yes.
If the uncertainties continues around the trade wars between, we have seen in the latest days that Donald Trump and China has once again postponed the tariff, the reciprocal tariff. If this continue, the uncertainty, how do we predict for us, how this will impact us directly?
Look, there are direct effects, there are indirect effects, there are induced effects also. That's what we call first round and second round effects. Now, they pull in opposite direction. If there is a tariff war, and if there's an increase in tariff, the first round effect is an increase in price. This is a tax. We all learned that first year economics. A tariff is a tax on goods and services. It will increase. So if there's a pass-through, obviously this is going to impact the price at which we pay to import our products. However, If the price increases too fast, it can dampen consumption. It can decrease investment, and then it could affect GDP growth. It moves in the opposite direction. So you can see that they are moving in opposite direction. So what we will have to decide at the Bank of Mauritius, which one is stronger? Is the pull stronger than the push? For the moment, we think, it's a finely delicate balance for Mauritius, as we've said. 3%, we think with tourism reaching more than 1.4 million and receipts being higher. And second, some of the measures introduced in the finance bill with respect to some taxes will probably have a positive impact on investment and growth this particular year. So that's why we said that, look, we hold and watch. We hold and watch, and we'll continue to do that. And as I said, it's a combination of what happened domestically and what happened internationally. As you know, over most of what we consume are imported. Food, medicine, and petroleum products. So we are price takers. So that's why, we've said that it's strategic caution. It gives us flexibility also. Because if we move in one direction, and then we have to go to the other direction, we have to do it twice. You see my point? Whereas if you hold, and you think that growth is going to be more impacted, then you go in one direction. And if you think inflation represents a bigger threat, you move in the opposite direction. So I think this is the flexibility that we are giving ourselves. Yes. Well, it's also what's going to happen in Europe. Jean-Marc, you know that Europe is our most important trading partner. It's also the place where most of our tourists come. It's also the place where we have a lot of investment. So Europe is a very, very important partner for us, much more than the US, let's be fair. So the secondary impact or the knock-on effect of a trade war on Europe could have knock-on effect on basically consumption in Europe. For instance, tourism, may say, because tourism is a discretionary consumption. Investment could be impacted. Okay? So the same thing for South Africa. South Africa is a major trading partner for us. It's also an important source of our tourists and our investment, especially in global business. So that's why we need to watch. So there are forces that are pulling in opposite direction. And that's why we think, I don't know whether it's 195 or no. It's the overwhelming majority of central banks are holding. India held. US held instead of pressure, in spite of pressure, as you know. So I think this is the right measure to do in the context, in the circumstances. We hope that the country can reach an agreement either bilaterally or through our partners, to renew AGOA, because paying 15% tariff is going to have some impact on our export to the US. And when we speak to all our stakeholders in that particular sector, they are concerned. So obviously, government is doing its best in order to negotiate either through AGOA or on a bilateral basis to make sure that our export remain competitive in the US market.
When you mention financial stability in your presentation, don't you think that what is being said of like Mauritius, the tension and crisis, the DPN saying this?
Can I?
Sorry, let me finish it.
Yeah, no, but can I stop you?
Yes.
Can I say, let me focus? No, let me finish, my friend. And you make speculation this morning, which hasn't materialized. And I've spoken to your boss. So let me say one thing. I don't want to embarrass my two colleagues here. We're talking about monetary policy. Once you are over with the monetary policy part, I will ask my two colleagues, and I will answer all the other questions that are not monetary policy. Is that okay? Okay. Because we have a job to do at the Bank of Mauritius, and we continue to do the job. And the decision was taken unanimously, without any question. Because the experts who are back there, they have done an excellent job. And I have not since being appointed governor, gone against the advice of the experts. They have done a good job. And we have to do that. And all of us supported it.
You have mentioned these measures to pay why buying petroleum products from the STC in rupees, that it is what they are doing than 11 or 12 months ago, but they are still have backlog. How did it impact the reimbursement? And then you say at the end of the year we will possibly clear the 6 or 7 years backlog.
Yeah.
Is it possible?
Yeah. So you have anticipated, you've asked a question. I mean, look, let's see. We have a flow. I think the flow is okay. We can meet it. There are some people, and this is human being, they try to speculate, they try to get 1 rupee here, 50 cents. We put some discipline in the market. As you are aware, all these illegal brokers, we've stopped them. There are some that are still doing it. The FDG is working with FSC in order to stamp that out. We have also removed the special licenses that were given by way of treasury management certificate, because they were operating outside the banking system. And they were affecting, obviously, the amount of dollars going to the banks. This has stopped. They're not happy, but as I said, we have to govern the central bank. We have to make decisions for the nation. So this has improved also. We are looking also at how do they price the forward market. And now, what we are saying is that we think there are about $450 to $500 million of backlog. We're doing well in terms of managing our reserve. We've done well. We've changed the way that we're doing our reserve. We're doing well in terms of return. Second, we are working. The FDG is working with commercial banks, and we're working with government to have what we call a burden-sharing approach in order to clear the stock. That the bank should do some effort, we will do some effort, and government also can do some effort. And collectively, we think that by mid-June next year, we should be able to clear this backlog. That's what we're looking at. All things constant. We're doing our job. But, as I said, we also need to invest our reserve that we earn in order to mop up excess liquidity in the system. Okay? And then, we also have to keep a certain level of reserve to satisfy a matrix that is imposed on us by both Moody's and the IMF. So we have to manage all these contradictions at the same time. Because if our level of reserve does not meet certain requirement, you get a negative point from the Moody's and from the IMF. So we are working on it. We're working on it, but there might be exceptional events. We don't know. Assuming there is a weather issue, what do we do, my friend? We have to continue to support the country to import food, to import medicine, and to import petroleum products. So that's the objective. Are we going to succeed? I think the pace that we are seeing in tourism, and if we think the fiscal consolidation impact is mitigated by these measures that have been taken, we can handle this. That's the hope. But we are doing, let me be very clear, we are doing much, much, much better than was before we came in. In terms of the amount of reserves, much higher. The flows are much higher. The rupee against the dollar, and the availability of currency also. And we have cleared a significant backlog from the STC and also from the CB. So we have not solved all the problem. I'm the first one to admit this. And I mean, you don't do that in 6 months, 7 months, or 8 months. So we have worked very hard, notwithstanding what is being said. But on these areas, monetary policy, our intervention in the market, the management of the market by our expert there, we see eye to eye. There is no issue.
Or justify that with the fiscal measures taken by during the budget will reduce deficit and debt.
I mean, look, this is good. Obviously, as Moody says, there's an execution risk. Now, again, Jean-Marc, there's no way the Bank of Mauritius can fulfill its mandate if we don't resolve the twin deficit. We all know that. There's a twin deficit, which is the budget deficit is high and the balance of trade deficit is very high. Now, if you're importing 285% of what you export, we know what is going to happen. So the level of imports is too high. And that's what I've said in many conferences. The country has to decrease its import. And there are two areas where the country has to decrease its import. First is clean energy. We have to increase the share of clean energy in our total supply. And we all know what this means because we are using scarce foreign exchange to import fossil fuel. Second, we have to invest in food security because we import too much of what we consume. And if we import if we do food security, we're going to give incentive to our local manufacturers, and we're going to reduce our outflows of dollars. But this takes time. No, it's not going to happen overnight. But in the meantime, if people buy too many cars, you know what happened. And then they can't come and lay the blame at the Bank of Mauritius. So we are working under extremely difficult conditions. But I think for the last 7 or 8 months, you look at all these metrics, whether it's inflation, whether it's the value of the rupee, whether it's the reserve, whether it's our availability of currencies, whether giving help to CEB and STC. Every day, CEB and STC speak to my friend at the back, our officer. And we try to help them, right, left, and center, because we do realize they have to import oil in order to provide us with electricity. And STC have to import for the population to be fed. So they are. And that's why there was an artificial shortage. And we were criticized unfairly. And then we had to intervene, and we gave instruction or guidelines that these interventions should be for the SMEs. Now, it's still a backlog, but we ease the backlog.
Governor Sithanen, during your statement, you said that since the situation has improved on the tourism side, so the MIC has asked the hotels, which are benefited the biggest chunk of MIC help, you've asked them to start reimbursing. Is there a target amount?
We will have again, let's not confuse, we are focusing on monetary policy. We are doing it, and so we will communicate basically on MIC and what is happening shortly. But it's not true to say that they are the biggest taker of loan. The biggest taker of loan is instrument is AHL, 25 billion. Good. So voilà. I mean, so if you look again, I do not want to embarrass my two colleagues because we have done a good job at the level of the Monetary Policy Committee. So now, since the questions are directed at me, so I will ask them to, and my officers also. Look, I don't want to get you involved in things that you don't have to. You do your job very well, and I thank you for basically what you've done. I will answer a question that is permissible because of my role as governor of the central bank. I'm duty bound by confidentiality and also by the nature of my job. But since there have been some questions, just on the eve, not on monetary policy. You've seen it. Not an exchange. I mean, look, again, I'm not going to go into the details. There are some issues. We have raised these issues with the people who appoint us, and this is being looked into. So I won't go more into this because, look, people know me for a very long time. I will try to respect the views of everybody. We have done our job, and we'll do it. But with respect to monetary policy, I saw some information this morning, again, which is probably not correct, that there's going to be a vote décision. So absolutely false. Absolutely false. But I've told you, there are some issues. But again, we have communicated. We have communicated to government, And again, I don't want to be unfair to giving you my side of the story. We have given our side. And again, you have published, many press have published many things, but there are many things that are published that are not correct. So my role as governor is to make sure that we fulfill our mandate of price stability and also of orderly and balanced economic growth. I'm not going to alimente plus de
Governor Sithanen, on the eve of the third MPC that you were chairing this morning, Deputy Prime Minister, talking in his capacity as leader of the MMM, he stated that you have served the country well, but time goes by. So that can be interpreted as a question mark on your 3-year tenure at the central bank. So I put straightforward, are you under pressure as central bank governor from the people who has appointed you for a 3-year term?
The person who has appointed me as governor is the Prime Minister of this country. And I have his confidence. And yesterday, the Deputy Prime Minister said, because of chaotic situation in which the Sithanen was, he also supported that appointment. And I thank him for that. I thank him for that appointment. And he said that I've done a good job. And I must say, it's not me, it's a team. I'm the leader of the team. I cannot function without a team. We've done a great job on these 5 metrics that I've mentioned to you. Inflation, cool. The value of the rupee, the reserve, the availability of exchange rate, and we have helped the CEB and STC to clear the backlog. Nothing is perfect in anything that we do. There's always room for improvement. So I'm not sure how this should be interpreted, certainly not how it was presented in one paper this morning. Okay? So I understand that. I'm not going to polemique. I respect Mr. Béranger for the work that he's doing. I think he's done a great job, to support the Prime Minister in taking difficult decisions. I've known him 79-21 for 47 years in a variety of ways. So, but let me say very clearly, I'm not sure I've understood what has happened and what is the interpretation of this word. Probably we should ask him. But I've been around enough not to polemique. But let me say one thing very, very clearly. I see many people defending competence and whatnot. But I'm also competent. And on all 4 grounds. I'm not saying this because it's me, but it hurts when people tell you that probably this, probably that. And if you look at the 5 metrics on what you judge people, la formation, l'expérience, l'expertise, les résultats. I've been around, since 1979. I see people saying, they come from this place, from this place, from this place. I graduated from one of the best universities in the world with first-class honors. I got a master's and distinction from one of the best universities in the world, among the elite of the world. I've never said it. So that's not formation? I've been Minister of Finance for almost 10 years. The longest serving Minister of Finance still alive. Is that not experience? I've worked at the highest level in the private sector. I became director of one of the largest conglomerates in Mauritius at the age of 36. Not because I'm the son of someone, exactly on my merit. Everybody knows me. I'm the first Mauritian to have been appointed the chairperson of the economic development of a foreign country. Not because of my family, because of my competence. I chaired the largest management company in this country for 11 years. And these people don't appoint you because they like my face or because of the name I have. So I'm asking for some fairness also. So if you look at academic qualification, which university I've been to, if you look at my experience as Minister of Finance, people may not like me for anything that I've done, but people respect me. And if you look at my expertise, if you look across the world, most of the time the governor of a bank is an economist. Go and check. I'm a qualified economist. And again, I said it. I'm not saying this to brag. How many people go to that university and got double first class? MSc with distinction. So I have to say some facts. And as I said, how many people go abroad? I've worked international institution. I'm the first Mauritian, to achieve director's level. I advise foreign government when I'm outside government. I've never been unemployed in my life. The day after I lose election, I'm employed by the private sector, either in Mauritius or abroad. So you have to be very fair also. L'Express has mentioned some time back that Jean Africa said that I'm one of the few good economists in Africa. So I have to be fair also. Of course I accept criticism. Of course we made mistakes. But you can't say it. Look, you have to be very fair. So that's the point I'm trying to make. I'm not going to polemique. I'm no issue. I respect him. And if he calls me and tell me what he's not, I will gladly, if I can help, I will help.
So what Béranger has said he has paid you?
I don't know. No, what I'm saying, I don't know whether he said that. You said that this morning. And I spoke to you. He said, look, this is not what happened. I've read it. I don't want journalists also to overplay what has happened. And what I'm saying that I read it differently. But since many people have asked me the question, now many of you asked me the question. They did not put it. You're the only one who put it. But look, fair enough. Huh? Fair enough. But I'm just saying that, look, I'm not, nobody is indispensable in this world. But I'm saying that, look, I've been around for 47 years. People know me. D'accord? And I'm a very hard worker. Look, I've met him on several occasions. When he asks me questions, I give him answers. Prime Minister, look, he's the one who's appointed me. That's what I'm saying. We accept criticism. Some of them are not fair, just like, you know how difficult it was when people say there is no device. But it wasn't our fault. If tomorrow, you said you're going to introduce a tax and you give 1 month, everybody knows what's going to happen, Kamlesh. And we have restored the situation. We understand that. So we all work under very difficult circumstances. And as I said, look, I will say it again. Look, I am where I am because of my education, because of my competence, because of my expertise. I come from an extremely poor family. So I don't need the support of people. Of course, the Prime Minister could have appointed someone else. He chose me. So that's the only thing I bring to the table.
Just to sum up, okay? You said that you have been appointed by the Prime Minister.
Yes.
You have his confidence. You respect the Deputy Prime Minister for the work that he's doing. You've known him for 47 years. You are 8 months into your 3-year tenure. So can we say that you are here to complete your 3-year tenure?
But the work, look. Again, je ne vais pas polémiquer, mais ne pas comprendre. I was very good to say, apparently I've saved the country. Which is good. But the work needs to be done. Now, there are issues, there are internal issues. But again, I need to respect the integrity and the institution of the bank. There are many things that are published out there that are not true. But because I'm the governor of the bank, I have to maintain the integrity of the bank. I don't reply. People know me. You speak to me, Jean-Marc speak to me, the others speak to me, but no, some take a different view. So I'm not going to polémiquer avec le DPM. As I said, I think he's doing a great job in terms of responsibility. It's not easy to make difficult decisions, but I've known him for a long time, and so I'm not going to reply. The only thing I'm saying, I'm a pure product of my education and my hard work and my competence. I hail from a very poor background. I've made it through hard work. Not because I'm A, I'm B, I'm C, and D.
Peut-être que le Premier ministre, hier, vous êtes se réjouir que la Banque de Montréal travaille de manière indépendante. Donc vous êtes satisfait qu'il n'y a aucune interférence de n'importe qui.
Look, you read the budget, Jean-Marc. The Prime Minister said in his budget is going to give more independence to the central bank. Now, look, I'm a Mauritian to understand what this means. That the central bank has to be accountable. Of course we have to be accountable. But have to function for the interests of the country. When we make decisions, the easiest decision for a central bank governor is what? Was done before. You just decrease the interest rate. And then we know what happened. You have to print money. Okay? Now the Prime Minister said in his closing remark on the finance bill, and very strong, this government will not print money. And people are telling me that I should print money. So what do I do? So I have also, because as I said, I'm a professional economist. We all made mistakes. But this one is so clear. The central bank must be seen to be independent and to do it. And that's very clear. So, as I said, I've been around. I know him. I respect him. If there are issues, I'm willing to do it, But, as I said, look, I've been around for 47 years. And as I said, look, if you look at all the governors, look, there have been only two, what I call, economists. Yeah? I'm not saying that the others have not done a good job, but look, okay. Now, there may be some people who are not happy, not my fault. So I think we're doing the job as a team, and we have delivered on some of the outcomes. And what are these outcomes? How the central bank is judged. On inflation. Inflation was coming down. We've taken measures. We've taken difficult measures. Increasing interest rate is not easy. Fighting with people who are playing with the system, especially the big corporates, is not easy. But I've told the PM, at my age, I have to work what is good for the country. And not, for lobbyists. People come and see me and say, give me a license for a bank. Well, how do I do this? You have to meet the requirement for a bank. And in the past, many banks have been granted license and they have closed. And we are still suffering from this. We know that. So I know monetary economics. I know fiscal economics, fiscal policy. I know this. So I cannot just give. Anyway, it's not me who give. There's a team that look after this. Look, again, there are some issues. I've said it. There are some issues we're trying to resolve it. But on the key deliverables. This morning there was speculation that there was going to be anti-sanction. There's not been anything. No discussion. Because the way it's presented by the experts, it's very clear. And as I said, I will not go against the advice of the experts, like it was done before, because we paid a heavy price for that. Now, there may be compelling reason tomorrow. There's a cyclone, if there's a pandemic, that's a different matter. But under normal circumstances, we have to do our job in a very professional manner. And, of course, with all due respect, the central bank is not a department of government. We know that. But we have to work in alignment, in harmony with government. Fiscal policy and monetary policy are the two faces of the same coin. I know that. I've been around for 47 years. I know that, Rama. Okay. So everybody, yesterday everybody told me, what are you going to do? I said, look, we know what we have to do. And I was reading when many of you, some of you are reading, say, what are you doing? I said, I'm reading. I have to read 200 pages, all the figures, everything. so that, we can make an informed decision, and I'm the chair of the committee. I need to be fully briefed. And you can see, I reply to all your questions.
La question qui a entraîné la réaction de Paul Béranger hier, c'était surtout sur les rumeurs, l'implication de votre fils qui était dans le couloir pour donner les ordres, pour ingérer, faire malpractice. Qu'est-ce que vous avez à répondre à ça?
Again, let me be very candid. I'm not spoken out of decency. This is absolutely false. Does anybody think that Rama Sithanen, with 46 years experience, 10 years as Minister of Finance, will allow anybody else to run the bank? This used to happen before. I don't want to be nasty because I was told I was nasty with that. There were mistructures who were running the Bank of Mauritius. Not now. Nobody runs the Bank of Mauritius. I'm the governor of the bank. But there has been a campaign, an harcèlement contre mon fils, which is very unfair. Give me one decision. If someone can give me one decision that I've taken under the influence of my son, I will make the decision. Not even here, MIC. Let me tell you, since I've become the governor of the bank, not a single cent has been disbursed by the MIC, except for investment abroad that were committed. So how can he influence me? He's never worked as a consultant. So on peut harceler un jeune homme. And let me tell you, people say, who is he? I mean, look, he's very qualified. And I don't want to say that. He got 5 years for HSC. He studied at the London School of Economics. He's a chartered accountant from Deloitte. He's working in the City of London. And he earns his living very well. His wife is an eye surgeon. You think it's fun? When you tell people, he does this, he does this, he doesn't need that. All these are false. You can ask, there are some people there, whether my son has given them instruction. He can come and see me. He campaigned for the Labour Party. I'll be honest. Ask Mr. Balamudi, the help he was given by my son. Okay? And he fought to support these people. He has nothing to do with I don't want to mention name. He has nothing to do with this. So unfair. People say I've got a Porsche, and people come to my house. I don't have a Porsche. You think this is fun? And I've worked in the private sector for a long time. I earn my living very well. So you need to be fair. Criticism is fair. But you can't say that Rama Sithanen est incompétent. No. This is most unfair. You can say you disagree with my choice. You disagree with my analysis. La même chose. This is a young man, and now, tous les jours, on l'enseigne. Il prend des décisions. Aucune décision n'a été prise par mon fils, et jamais je l'accepterai. Nobody influences me. We make informed decisions. Cool. I'm an economist, I understand. I'm not right all the time. Yesterday, some people were telling me I have to reduce interest rate. I told them no. Because of the balance of risk. So this is totally false. He's a young man. He could have been your son. Let him live his life. He's not a consultant to any of these people who have earned loan false. So all this, huh? Comment il no, totalement false. It's some people, including some people who said that. So how can you, and they make wild allegation. How insulting it is when people write, what do you expect when un massacre typiquement gouverneur de la Banque centrale? You think this is fair? You think this is fair? Of course I sold gratuitement. But I went to the best university, one of the best universities in the world. So they forget this? C'est quoi ça?
Vous avez parlé juste pour terminer, vous avez parlé que vous ne pouvez pas donner à tout va une licence à n'importe qui pour ouvrir une banque. Il y a aussi, par rapport à ça, des documents qui circulent que le first DG a, 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 a été mis sous pression pour donner naissance à une banque privée. Donc,
Yeah, let's be fair. Let's be fair. I'm not going, look, we work as professionals. There is no bank license that has been given since the three of us have been appointed. None at all. Ça, si on dit qu'il faut passer par le monsieur que vous dites là, il n'y a pas eu. Give me one example where the Bank of Mauritius has issued bank license since I've been appointed governor. The only transaction that has taken place, say IBL wants to sell their shares in Africa. That's not. So, and they fabricated a WhatsApp. Nobody has been sacked at the Bank of Mauritius. So, that's what I say. Monetary policy has to be evidence-based. But that also has to be evidence-based. You can't sit down. It's so easy to write this. I can buy a Porsche if I want. I've worked very hard for 47 years. And I worked for 37 years in the private sector. Only 10 years as minister. But I don't have it. But they just fabricate things. There's no decision. No bank has been granted license. So how can someone influence me to give it back? Somehow, look, I have no choice. I would not have replied if there was no monetary policy committee today. But because, and I knew, look, I may not be very bright, but I'm not stupid. So I knew before I came here that you would ask this question, and that's why I tried to separate the two, because I don't want to embarrass my colleague. And these are the facts. And again, there's a lot. I give you one. There's a whole debate about FSC. Now, it's the Prime Minister who has appointed me as chair of FSC. It's his prerogative. And let me tell you something. This debate has been going on since a long time. Go and check who was in office in 2000 and 2005 when FSC was set up. And you know that in a country like Singapore, we don't have two regulators, there's only one regulator. And when we set up two regulators, there are three issues that you have to be very careful about. One is the risk to financial stability, because the risk of global business is higher than the risk of bank. Second, there is what we call arbitrage. The Bank of Mauritius doesn't give them a license, they get a license there. We saw it for foreign exchange transaction. Three, the Bank of Mauritius refused Sobrino a bank, he goes there, he gets a bank. So what decision was taken? They decided to go ahead with FSC. But they put the guardrails. What was the guardrails? Go and check who was the chairperson when FSC was done. It was the managing director of the Bank of Mauritius. Mr. Padiachi has been the chairman there. Mr. Padiachi again. And the last one was Mr. Sigulam. Now they are creating, indirectly I hear what happened. But we need to have financial stability. We need to prevent arbitrage. We need to prevent this. Even I am chairman of FSC, it has taken me 8 months to put an end to this arbitrage. And again, be fair. Who created offshore in this country in 1991? I created offshore as Minister of Finance. Who has negotiated with India to retain Article 13? I negotiated with Dr. Manmohan Singh. I negotiated with Mr. Pranab Mukherjee to retain Article 13 on capital gains. What happened afterwards? We lost it. I've worked as a policymaker in global business. I've worked as an operator, as chairman of the largest company. For 34 years, I've followed global business. I can help. So, of course, there are many other people who know it. But I'm just saying that you need to understand the context and be fair to people. I'm not here to polémiquer, but I have to restate the facts. There are many people who don't understand this because I don't have a chance to reply. Okay? So, good.
Vous êtes gouverneur de la Banque de Maurice et également donc président de la FSI. Est-ce que les deux ont déjà donné leur clearance concernant l'éventuelle nomination de M. Vini à la SBM?
I was going to state, I'm glad you have not asked that question. Let me try to tell you what I can tell you. Again, there have been a lot of unfair criticism against me personally. I've known Mr. Banque for a very long time. Mr. Banque is a bright man. And let me state very clearly, Mr. Banque has every right to sue the Bank of Mauritius. Every right. We acknowledge that. Second, the fact that Mr. Banque is suing the bank cannot be a criteria not to give him that post. That's very clear. Many people don't know that. However, like anybody who wants to become a director, Mr. Banque must meet the fit and proper test. And I've tried to make some proposal. And I was forced to seek legal advice. So this is the challenge. So I'm at pain because I could not find a solution. I wish I could find a solution. But the way it has been handled, has been quite tricky. And let me tell you something else. Mr. Banque is not suing the Bank of Mauritius. Mr. Banque is suing the government of Mauritius. I hope this is clear. In fact, it's more than the government of Mauritius. Because his case hinged on an alleged promise, not by the Bank of Mauritius. So it's very unfair what is being targeted at me. It has nothing to do that Mr. Banque, was Minister of Finance or I was Minister of Finance. Mr. Banque has never been my rival. I was Minister of Finance for 10 years. He was Minister of Finance, for 8 months. In the subconscious of Mauritian, there was someone who was competing with me, is Mr. Lachmanaraidu. Let's be very fair. So all this game that I have a personal, absolutely false. Absolutely false. He's got every right. But Mr. Banque has been fully compensated to the tune of 66 million rupees. Fully compensated, 66 million rupees. For the money that he refused to take. Plus interest. Plus all. I won't go into the detail because I don't want to embarrass it. But you've asked a question. And there's been a lot of rumors that it's a conflict between Mr. Banque and me. There's no conflict. There's no conflict. It pains me that I cannot do that. I wish I could do it. But the way this has evolved makes life very difficult. And there was some concern that because he's suing the bank, absolutely true. We have legal advisors. He's got all the right. But, like everybody else, he has to meet the fit and proper test. And as I said, there are some people, I could not say it, but you are forcing me to do it. He has been paid 66 million. And he's suing for 260 million rupees. So thank you very much. I don't want to polemic everybody, but I need to set the pendulum because there has been a lot of unfair attack also against me, against my family. Nothing. We're not looking for favors. I've always worked very hard. And the only thing I bring to the table is not my family name. I bring to the table, my education, my competence, where I've worked, not only in Mauritius, globally. So thank you very much.